Hey everyone, thanks for tuning in. If you clicked on this video, it's because you're ready to take your trading to the next level. I thought it'd be nice to make a video explaining how I trade. This is probably my third video that I've made ever for YouTube, and I decided to break down the strategy that I use to trade. I trade one session a day, so I'm only on the screen for 3 hours. I trade either London or New York. Almost all of the time, I'm more focused on London. So I trade 3 hours and I catch 10 to 20 R per day, no matter what. I've only had 2 losing days in the last 7 weeks. And so you can imagine how if you learn something like this, which I would consider a reaction-based entry system, is what I would call it. If you can refine the current method that you have, or maybe this might be the system that you're looking for, I'm going to make some more videos breaking it down. I'm going to do trade recaps showcasing the trades that I take every single day, every single session, to kind of give you a glimpse on what it looks like. But this video is going to break it down. We're going to go over 5 different setups from the higher time frame on the daily all the way to the 1 minute, so I can show you how I execute my trades. Whether you're the type of person that's trying to be a swing trader and you have a full-time job, so you're only able to trade a couple hours per day or a couple hours per week, I'm going to teach you how you're able to find and execute very high risk to reward trades that some people might be happy with making 5 to 10 R per month. You will very easily be able to hit 10 to 20 R per session. So it's going to be mind-blowing. So I hope that you enjoy this video. It might be a little bit advanced. You will require some understanding of supply and demand zones as well as market structure. In the future, I will make more videos on those topics. But in the meantime, I'm going to keep it simple and just show you how I trade, because that might be something that you already will quickly understand how I do it and why I do it. To keep it simple, we're going to use extremes. So the extreme of a leg, when we're uptrending, you're going to notice that what we're doing is we're basically breaking the highs and we're protecting the lows. So in an uptrending market, we're going to focus on continuing the uptrend or finding reversals when these zones break. In an uptrending market, we are protecting the lows and we're targeting the highs. In a downtrending market, we're going to be protecting the highs and targeting the lows. Understand? So let's get into it. I'm going to start opening up this right here to show you the examples that we have. All right. So this is Euro US dollar. We're going to start on the daily time frame. So as you can kind of see right here, just taking a look at this, what are we doing? We're making higher highs, we're protecting the lows, and we're targeting the highs. Right? So I'm going to show you setup 1. So setup 1, what do we have here? This we would consider a demand zone, because this is the low leg, the low of the leg, the extreme. This is where the accumulation occurred on the extreme part of this leg that created a break of structure that broke this high. This is where price peaked. So we're on the daily going to consider this pivot part of the range, the pivot part of the leg. We're going to consider this the supply, because this is the extreme of this leg. So from here to here is one leg. This is the demand. That's the supply. So our expectation in this type of setup is that if we're continuing to have a long bias, then we're going to protect this low and we're not going to break it. And then what we're doing is we're going to target the high and take out the current high and continue. That's our expectation. Now with this system that I'm showing you, I'm going to teach you how you can catch massive trades on reversals. Now most people are not going to trade the daily time frame, but obviously I'm showing you a higher time frame to show you that this works on every time frame, right? So I'm trying to keep it simple for you. But let's just say most what you would call smart money concepts traders, right, might have a very rough way of doing this. If this was any time frame, what they would do is they say, oh, there's probably an order block here, right? And they're going to set a trade from here. This is going to be your stop as long as it doesn't break the high, and they're going to target the low. So let's just say if they wanted a reversal, they're going to target this low, and this is their area of protection. Let's just say this was a trade you were taking. This is a 1 to 4 R. from here all the way until it breaks would be over 130 days, which is, obviously a very long time to hold a trade. Obviously, this is on the daily, so probably wouldn't work out the best. Now, if you were doing the opposite, if you were looking for longs because you're looking for continuation, when this high was made, what you'd expect is that the low is protected and the high is targeted. So they would have taken a trade like this. They would have entered here, and they would have set this at the top because they want to break structure. This would be a 1 to 5.7, which never hit the take profit because guess what? Price reversed. So I'm going to teach you how to catch this reversal. As you can see, just setting risk entries is just not going to work necessarily all the time. So I'm going to show you how you can get a much better entry on these type of trades. So we're going to break down, go to the 4 hour. Let's bar replay all the way back here. That way we don't get confused with what happened later. We're on the 4 hour. So I'm going to teach you this. The same way that I was showing you that when we're in an uptrending market, we are protecting the lows and targeting the highs. That's the expectation. So when do we know when we break, let's say, it's the bullish momentum? The moment we break bullish momentum, what happens is we're going to start targeting the lows and protecting the highs. And this is kind of a rough, ugly drawing. Apologize for that. But the concept here is once we start taking out the lows and failing to make newer highs, that's when we know we're shifting. And so what we would call this is a change of character. Now what happens is change of characters or shifts in momentum, these always will occur, they all occur somewhere within the legs, but the best place to catch them is when they're reacting to a higher time frame. So in this case, if you were entering on 4-hour time frames, then you'd be looking to target daily zones or weekly zones. And so it's important to understand that the higher time frame zone is always going to be stronger than the lower time frame zones. For example, the weekly will always be more powerful than the daily. The daily will always be more powerful than the 4-hour. And the 4-hour will always be more powerful than the 1 hour. The 1 hour will be more powerful than the 15-minute, than the 5-minute, than the 1 minute. So that's important to keep in mind, right? Because what we would see is that we have a very aggressively trending, bullish intention style market. So this is very bullish, as you can see, very corrective. Price is very aggressively pushing up. We're obviously expecting a continuation just based on the idea that we're already in a bullish market. We would expect this to continue and break the high, correct? But in this case, that's not what happens. In fact, what do? We take out this little high here that was a wick on the daily. And you can see that we continued that until when? When did we begin to break structure and shift our momentum? So if we're going to, let's say, mark out these levels, this low, protected. This low, protected. This low, technically protected. What did we do? We made equal lows. We shouldn't be making equal lows because that's basically inducement of liquidity that will later be targeted. So that's already maybe an indication that we could get some sort of pullback, right? But not necessarily a reversal, right? So anyways, we're waiting for price to come into that higher time frame zone. This is a daily zone here, a daily supply zone. Now, it's the extreme of the leg, and that's why it's a supply zone. Not necessarily because it broke structure yet. We haven't gone that far. We're currently in this area. So what we have here is, let's look for the continuation, right? So in this case, the highs are targeted and the lows are protected. So we're constantly breaking the highs, as you can see, right? At this point, we made this wick high, price pulled back, pushed up. This one failed to make a new high, created equal lows. So it's creating some inducement here of liquidity. Then price has its final push up. What do we have? A new high. So currently this is the highest high that we have on this chart. What we are expecting is for price to pull back, respect the demand, and continue upward. Because what happens in a bullish trending market, we are protecting the lows and targeting the highs. So we're basically looking for a change in character, a shift in momentum, a shift in sentiment if we were getting a reversal. The moment that this low is broken, these 2 points of structure here, these equal lows are taken out. by this massive sweep on the 4-hour. We've now been instructed that we are officially switching to bearish market structure. At this moment, we've indicated that after this, we failed to make a new high, and we've pushed down instead of we've taken out the low. And so what happens is, if we already know that on the higher time frame that this area was a supply zone that created the pullback that ended up making a bullish market have its pullback, and it was an aggressive pullback, as you can see how powerful the shorts were. When we're in a bullish trending market, all we're looking for is when price is going to reverse. Now, whether it reverses in here or it sweeps, that's not as important. What happens is we're waiting for a reversal or a continuation signal. In this case, we get a break in structure on the 4-hour that takes out 2 points of structure, sweeps the lows, and tells us that it's time that the price is starting to give us reversal signals. So in this time frame, you would have had how much time to react? You would have had about a whole week to react on the daily time frame, 6 days, 12 hours. The moment this would have happened, we would have already been looking for signals to take short. So in this case, the same way that we treat the leg, the extremes, if we took this as a leg, for example, from here, from this high to this low is a leg, where is the extreme responsible for the short? Well, this is the extreme. We'll get into order blocks later. You've probably already seen videos about stuff like that. But this is the extreme. This is the last place the price pushed up before having a sell-off that created an aggressive sweep down here that took and broke structure. So at this point, we're looking for an entry right here. So this is entry 1, right? This is a pretty safe way to trade. Now, had we taken a risk entry on the daily supply zone from here to here, remember it was like a 1 to 4, right? And this is a 130 plus pip stop. We've now, instead of just taking a risk entry from a daily zone, we've now awaited confirmation for a shift in market structure. We've waited for a signal of reversal, and we've waited for the mitigation of the point of origin or the extreme of the leg responsible for sweeping 2 points of liquidity. And that's where our entry is going to be. So this would have been my entry. And of course, we're on the daily time frame. So because we are trading the daily time frame, we're targeting from daily supply to daily demand zones, correct? So if we're looking at it like this, from this low to this high to this low to this high, if we correctly got an entry for a short bias, then we should be targeting the previous extreme of the leg. This would be a demand zone, and this is a weak demand zone. It's weak because this point of origin, this extreme of the leg, failed to make a new high. Therefore, there's not enough power or liquidity in this zone, orders in this area, to break the high. And therefore, this is now going to be targeted because now we're noticing that, hey, the highs are being protected because we're getting a reversal signal, and therefore the lows are now going to be targeted. So check out this trade from this all the way down here. Now, once again, we're trading the daily supply zone with a 4-hour entry. This is obviously going to take a while. This is, let's say, over 78 days, and you got 27 plus R. That's insane. Some people don't even get that in several months, right? And even a year sometimes, right? So you would have had 27 R on that entry. Now, it gets better, right? Because guess what? There's other ways that we can also use for confirmations. Not everyone would have got that trade, even though you had almost an entire week to take advantage of that. All right, so I'm going to show you a different type of setup that you could have taken here. This is called a flip. You see this? Let me explain what a flip is. What we're seeing here is that this massive short candle before this attempt up is the extreme, another leg that we have here from this low to this high that failed to make a new high. But anyways, this zone here, this massive push down was immediately basically taken out by another bullish engulfing candle right here. This candle was bigger than the sell, and then it pushed up to mitigate. So what we're going to do is we're going to highlight the flip zone which is the candle that, let's say, sold before this buy, this push up. And what we're waiting for a flip is basically we're awaiting a reaction to make an extreme that creates a failure in that demand to take another entry. So once again, a flip. We're looking for a flip zone. So now, the first entry that we got was solely based on a higher time frame change of character. We broke market structure, and we've shown that we're now shifting our momentum. We're shifting the sentiment. We're shifting from bullish to bearish, right? That's entry one that we got, as you see right here. But now we have a secondary entry that we could have taken, and this is based on the flip zone. So anyways, as we once again to break it down, this is the demand zone that initially created this push up. If price respects this and makes a new high, then what happens is this would have been a great place to look for entries to go long. But because we're changing character, we're basically awaiting that this massive zone. Now, you know, this is how many pips? It's like 60 plus pips. This is a pretty big zone. You wouldn't want to just take an entry long or an entry short here, but we have the indication that we're starting to break down. So we're waiting for at the point that this zone fails. So from this low, because this is the extreme of the leg, we're waiting for a failure of this zone. So the demand, we mitigate this area, price comes into this demand zone that pushed up here initially, fails to make a new high, creates this little base here, a little range of liquidity that looks very small. It's approximately like 10 plus pips, about 12 pips. Price then from this area pushes down and creates the failure of this demand. So this is a flip. This is a buy to sell flip. And therefore the extreme of the failure is from this high to this low. So we will enter at the extreme. Now other videos will go about decisionals. This video is solely on extremes. So this would have been entry 2 right there. We would have entered from this, the bottom of the range, protected to the high of the range. We would have been up maybe 2.2 to 0.5 pips just to protect, or even 1 pip, whatever, to play it safe, right? Price came, made equal highs, did not take us out because it did not break structure. We have a 12.5 pip stop, and guess what? Another entry. So entry number 1 provided a 27R trade, 20 pip stop loss. This one had a 12 pip stop loss and a 40R trade. So if you missed the initial move, we had a secondary entry just based on a flip. So now let's take a look at this. We basically traded, let's back up a little bit here. We basically took a daily supply zone and we basically looked for a 4-hour change of character that confirmed we're switching bearish. Now, if you're risking 1% per trade, even if you're wrong and it made a new high, it could have given you another entry later. You risk 1%, but in this case, there was no signal to go short anywhere along here because we had not yet reached our point of interest. We're now trading a reaction-based entry system. We're waiting for price to react to higher time frame zones. Therefore, this was the reaction we're looking for, the change of character. We laid the change of character here. Then we got a flip entry, and we got the first entry is a 27R, second entry is a 40R trade. And once again, because we're trading a daily supply zone, we're targeting the daily demand zone. We're targeting the extreme of the leg. Price comes down, wicks, breaks through, and continues downward. Now we have over 67R in these two trades, which is insane, right? So that's what the power of a reaction-based entry system is. And that's just example 1. So let's go to example 2. With each example, I'm going to be showing you different time frames that you could enter on. So let's look at setup 3. So on this one, we're probably going to have to be the 4-hour. Let's take a look. Let's go here. Zoom to here. All right, so anyways, if we take a look at this chart, what do we have? If we're going to think like on a much higher time frame, this is one massive leg, right? From this high to this low, right? But now if we're focusing more on the details of what's happening in between here, you can see that we are creating bearish market structure the whole way down. We're protecting the highs and we're targeting the lows. You can see that because we're not breaking any highs. And this was the point at which price had a massive injection of momentum that created the largest push down, right? So this is an area of interest. Why? Because we have a large number of orders that came down here. So from this high, let's say from this high to this low, this high, this low, this high, this low, push up to this little order block that we have here that created so much, there was so many orders within here, so much volume that for 4, 8, 12 plus hours, price dropped so quickly, it left behind so much imbalance within these candles. And this was where the break of structure occurred from this. This was the extreme of the leg. So what we're going to focus is on from this point to this point, right? That's the extreme. This is the origin, the extreme of this massive leg. Then what do we have? A continuation. Push up, lower, high, then lower, low. We broke the lows right here. Why? Because in a bearish market structure, we are protecting the highs and targeting the lows. At this point, what do we have? Protecting the highs, targeting the lows. This was actually the last point at which price broke a low and then market structure switched. This was the point where we went from bearish to bullish. We broke the last low, then we broke the high. Price pulled back, protected the lows, and now targets the high. Took out this level. Now, you could have taken trades in between here, but I'm going to show you specifically on higher time frame zones. So the first two setups were based on a daily supply zone. This is now a 4-hour supply zone. So there will be more 4-hour opportunities than dailies. There'll be more 1-hour opportunities than 4 hours. There'll be more 15-minute opportunities than 4 hours, 1 hours, you know. So I'm kind of breaking down to the lower time frame so you can see how this applies everywhere. So once again, if you were someone who just trades regular smart money concepts and you were taking a risk entry on this trade, you would have had a 12 pip stop, which is pretty good, and you probably would have been targeting what, the low. So from this low to this high to this low to that high, you'd be targeting about here, or maybe even further down, right? But more than likely would have been targeting here to play it safe. This would be a 1 to 7. Now here's the crazy part. You got sweeped. So this trade failed. But notice, obviously, we have a massive push in momentum that brought price short. Look how much power in this move down came, right? The worst part is you got stopped. You got stopped because you got swept, right? And so that's why I'm trying to teach you to get away from risk entries and only take reaction-based entry systems. This is so powerful because it's going to stop you from losing most of your trades, and it's going to teach you only take trades based on the reaction to higher time frame zones with confirmation. So we're going to go into this specific setup, right? So anyways, we're trading a 4-hour supply zone. This is the extreme of this leg that has been untapped. So it's not yet mitigated. Therefore, we're waiting for a reaction on the higher time frame to this zone, right? So let's go down all the way to the 15-minute. We're going to bar replay all the way down here so that we can have an uninterrupted view of this. On the 15-minute, maybe it doesn't necessarily look so clean. By the way, this was the push up, right, from there to up here. That was the origin. Remember, from the leg. This was one leg. Notice how we didn't create lows and pullbacks here. We didn't do this the whole way up, right? This is one massive impulsive push up that came to sweep this zone. We're going to go to the 5 minutes, see if we can see price a little bit more clearly here. The 5 minutes shows a little bit more of a more clean setup. So let's take a look at what opportunities we have here. All right. So on the 5 minute, here we are. Well, what do we notice? We're looking for reactions to higher time frame point of interests, right? So in this case, what do we have? Here you can see that price came into tap, pulled back, right? Now this isn't an indication to go short just because we had a pull back. because this was a very high momentum push up into this price. This isn't enough. Confirmation, we want at least 2 breaks of structure or 2 points of structure to break to have a really strong confirmation, right? So if I was going to mark out some levels here, let's get rid of this part just so that we can have more clarity. Let's say we have this low, what happened with this low? From this low to this high, so we created a new high. Then price, what happened? Pulled back down here to this extreme, so this high to this pullback. This was the bottom of the wick for the next push up, and this push up was the one responsible for the sweep. So from this high, or from this low to this high that did not break this high, price pulled back down, broke structure, and created a new final high that swept the highs. So now what are we awaiting? A change of character. A change of character, once again, is when we are starting to have a shift in market structure, a shift in momentum or market sentiment. The moment that we are going to switch from bullish to bearish is when the lows are no longer protected and they become targeted. The moment we start breaking lows and no longer making highs, that is the moment that we are starting to have a change of character. And we only pay attention to change of characters that happen at higher time frame point of interests. Remember that. A change of character in the middle of the chart is worthless. It's not going to do anything for you. We only trade from higher time frame point of interests. Anyways, from this high, what do we have? A push down that what? Broke demand. Now you might be a little confused on why this is demand. This is on a 5-minute time frame. It looks a little bit confusing. You're like, well, isn't the bottom of the leg here? You could argue that. You could say that this is the bottom of the leg, but the reality is the price from here pushed up, pulled back this extreme, pushed up to here, pulled back here, then created this final push up. So that's still a pullback on a 5-minute time frame. So in that case, we could use this as a potential indication for the change of character. Now, remember, as we mentioned, we like to trade when price breaks at least 2 points of structure for security, right? Because one could just be a sweep, right? We could be wrong anyways. But let's take a look at this. What do we have? From this extreme, from this leg, broke this point of structure. At that point, it's confirming a change of character. But we want to have a little more confirmation before we come for an entry. Price pushes up here. What happens? This area could be considered a small mitigation of this zone. This is the last final push up. In here, there's an order block. This is, we could just, the final push up before price went down to break structure. So price came in to mitigate, and then what happens? Price pushes back down. At this point, we've now broken a second point of structure, right? We've broken this first one, and now we've broken the second one. So at this point, what are we looking for? We have an official confirmation of change of character because we have 2 points of structure that are broken, right? So in this case, what are we looking for? We're looking for a short entry. From here to here, this is the extreme of the leg that initiated the move. And therefore, we want to take a short from here, right? Now, from here, this is the moment where we broke the low. So at this point, we're waiting for price to come up. Now, if we were going to trade this, now that we're getting an entry on a 5-minute time frame instead of the 4-hour like before, or the dailies, a 6 pip stop loss is pretty crazy, right? That sounds kind of low. But we want to minimize risk because we kind of look like we're creating a trend. We're kind of ranging right now, right? So it's kind of unclear. So what I like to do is I like to take trades at the equilibrium or at the 25% zone. It depends on what the chart's showing me works best that day. But in this case, we're only going to take trades at the equilibrium today, right? So from here, this was the extreme of this leg that broke the first point of structure. Price came up and mitigated, broke another leg of structure. Now, because these are so close to each other, this mitigation didn't come to equilibrium. And therefore, for me, this has not yet mitigated this, this last push, especially because look at this wick. This is a pretty large wick. Most of the time, price is going to come to mitigate the wick, when you have such a big wick. There's always stuff within the wicks. So we're going to take a short entry here once price comes to our 50% of that range, of that candle. So now we have a 3 pip stop loss. So as long as price doesn't take out the high, we're protected. And what are we doing? Once again, this is a 4-hour point of interest, a 4-hour supply, so we're targeting 4-hour demand. Where's our 4-hour demand? Well, from here, this is the extreme of the leg. And what are we expecting? Well, this supply zone was responsible for continuing a bearish market structure, and created several breaks and structure downward. And therefore, we're going to see that this is a very high momentum zone that we want to at least target for a market structure break, right? So in this case, what are we doing? We're targeting, let's clean this up here really quick. We're targeting the low of the extreme. So this is the extreme. This could be classified as a demand from here to here, right? But we want to break structure because we know that this was just a buildup of liquidity to push up into this zone. So let's go back to the 5-minute right here. Let me show you what the entry looks like. I already have it marked up here. This would have been our entry. So 3 pip stop loss, targeting what? A break and structure, which also gives us what? Equal lows. Equal lows is an indication of inducement of liquidity, basically creating a zone that we are going to have to take out on the way down. So what are we doing? 4-hour supply zone, targeting 4-hour, targeting the lows, right? Because in this case, what we are expecting is this 4-hour demand zone, supply zone that we had. What was it doing initially? It was breaking market structure to the downside, so it was showing us that the highs are protected and the lows are targeted, right? And therefore, this was just a push up to come back to mitigate that zone, and therefore we are waiting the continuation. And therefore, the low is targeted and the high is protected. Now, the high was swept, and that's why we only take reaction-based entries, because reaction-based entries have a much higher chance of holding than if you just took a risk entry. You would have been swept by, 1.5, 2 pips, right? So this was a pretty good trade. This one ran 1 to 35. Now, here's the important thing. You might think, well, why am I going to hold a trade for so long? That's kind of risky. What if price turns back around? Well, we keep it simple, right? First of all, we know that this is an unmitigated higher time frame zone. We already know that that supply zone was responsible for creating multiple breaks of structure and continuing a bearish push. Therefore, we are expecting it to still be strong as it's unmitigated, and we've built up so much liquidity pushing upward that we're going to target that liquidity on the way down, right? But to keep it simple, on this 5-minute chart, when you break the previous leg, you are now going to go to break even. So what happens is from this low to this high, price is now ranging in here, creating liquidity that it wants to sweep on the way down. Price does a final push up. Guess what? It didn't take you out. This is still here. In fact, you could have gotten a second entry here if you wanted to, if that fit your rules. Did it push higher than your original entry? It did, but it did not break structure. So you're still protected with your 3 pip stop loss, which is insane, right? So you're still protected, and you're moving your order to break entry once you sweep the previous low. So from this low to this high, once we break here, once price has pushed about 14.5 pips, you're already at break even. So therefore, even if this came back and swept you, you wouldn't have lost anything. You would have just gone back to break even. It's as if you didn't take a trade. But instead, and how much time did you have to react to this entry on the 5-minute? So from this sweep to this break of structure that we had that indicated what? A change of character. When we had the change of character, we had about 1 hour to get our first entry and about 7 hours to get our secondary entry. Isn't that insane? From 4-hour supply zone, targeting the lows, we got 35R. And how long did this take from our entry to our exit? This trade lasted less than 24 hours. 21 hours to get 35R. That's insane, right? And this is a 4-hour supply zone with a 5-minute entry. The first one was a daily supply zone with a 4-hour entry. So now you can see how you can get these trades without having to wait several days or weeks for them, right? That's insane. So anyways, let's go to example number 4. Hopefully you're learning a lot on the way that I trade and why this makes sense, right? The whole idea behind this is to trade reaction-based entries. When you stop taking risk entries on higher time frame point of interests simply because there's an order block or something, you're going to see that when you adapt this style method and reaction-based entry model system, you are going to have a much higher win rate. You're going to stop getting swept from the markets. Now check this out. What do we have? This is a daily zone. Now look at how long this bearish leg is. You could argue that from this high to this low is one leg, right? But what do we have? We still have pullbacks within here. Now they're small, but this is also on the daily. We could break this down a little bit more clear, right? This is what it looks like. Kind of very aggressive, but still we have pullbacks in there. So what we're going to look at is from this push up, price had very high momentum drop, push down. This was the low. Price pushed up to mitigate something in here within the range that was created in here, right? Closed very strong, closed with very small wick. And then what happens is we get a massive bearish engulfing candle that came down and took out the low on the daily time frame and created a continuation down that later on the daily came back up to to sweep it. Had you taken a trade just based on the daily order block, you would have been swept and that would have been another losing trade. So now let's look at this on the 4-hour. This one's going to have a really cool entry, right? So on the 4-hour, this is what the daily pivot looks like. This push up was one massive candle on the daily. But now that we're on the 4-hour, we have a more clear view on this, right? So if we take a look at this, what can we do? Well, we have a pause in the market, a doji. This was the last push up before an engulfing candle here, a pause in the market, and then a massive high momentum engulfing candle that came down that broke this previous low. Now in here, we mitigated something in here. That's why price came up to here, right? This is the last push up. Then price came down, created this low. Price is coming up to mitigate this zone. Mitigated and created a continuation at the supply zone and pushed down. So what are we looking for? We're now looking for, instead of just focusing on the whole daily candle, we're going to narrow this down to the 4-hour. And this might look ridiculous, but this is a perfect zone to have traded from. This is the extreme of the leg from this high to this low, right? This is extreme. This is the last push up before we had massive shorts and continuation downward, right? So that's the zone we're paying attention to. So let's turn on setup 4 and let's go down to a lower time frame. Let's see, maybe the 15-minute, or let's go down to, I think the 1 minute will work for this one. Might take a moment here. Apologize for how messy it looks. As you can see, I'm kind of new to making videos. All right, perfect. So here we are. So what do we trade? We don't trade just because price comes into our zone, meaning we don't just set a risk entry, which would look like what? What would this look like? This was what a risk entry would have looked like. You would have had a 7 pip stop, right? Yep, 7 pip stop, which looks really small. Target. This is a 7 pip 4-hour candle. So for an entire 4 hours, price only moved within these 7 pips. You would have taken this risk entry, and guess what? You would have been swept. So we're gonna break down this this setup and what I saw, right? So anyways, what's happening here? Price came just before this zone, and created a lot of equal highs. Why? Because it's inducing liquidity for the push up. What's happening here is there's not enough liquidity within this 4-hour zone alone to get a reaction. So we already can tell that a short from this zone might be a little bit unlikely in this current moment, because we have to induce liquidity for this push up. Therefore, there's probably not enough in here to create a massive push down, right? So what happens? We also know that equal highs are going to get swept, especially because we haven't tapped into the higher time frame zone. So we absolutely are not looking for trades here because we have not yet arrived to our higher time frame zone. And that's why it's easy to fall into traps. If you're taking trades here in the middle somewhere, we still haven't arrived to a higher time frame zone, so there's no reason we don't have a reaction to a higher time frame point of interest. And this is a purely reaction based entry system, right? So anyways, we swept these highs, price pushed up, created this little wick, mitigated something within here on a lower time frame, and price pushed down. At this point, what do we have? We have a sweep, and we're looking for what? Like some sort of change in character. Price pushes down here, shows us that it's moving short, and actually many people would have said, shoot, I already missed my opportunity to get an entry. There was nothing in here to have entered by. You can see we're moving with such weakness, very corrective bearish structure, and so much weakness. Look at how small these candles are, that we're barely pushing away from this zone. This should have been an indication that this would have not been a good entry to take. And not only that, but there was no entry. We didn't get a mitigation of this point of interest of this wick. And remember, there's always stuff hidden within the wicks on the lower time frame. So we would have waited for something to come into here, right? So anyways, you can consider this a change of character. We broke these highs, made a new high, took this low. We could have been looking for shorts, right? But here's the thing. We don't look for risk entries. So if you look for risk entries, you would have taken the zone and you probably would have been a little excited, thinking you just got a massive, you're going to get a massive short with a 3-pip stop loss, and you're going to win, and you're going to make a lot of bank here, targeting the 4-hour low. But the reality is, like I said, we don't take risk entries. It doesn't make sense. Now, this day we also had news. So London session was happening right around here. And at 5:30 a.m., we had red folder news, which you already know is going to be something that's going to be very intense. It's going to rock the market. We are careful when we trade these type of events, right? And we try to avoid trading events more than anything. So not only did we come in to mitigate this zone during the news event, right? But instead of pushing down and creating a massive short, all we did is we swept all the liquidity that was created here. And so, to protect yourself, we didn't actually have any possible entries that we could have taken. The mitigation, this is a risk entry. This isn't a confirmation-based entry. Price had already pushed away pretty far and left so many zones here that we just swept on the way up, right? So this wasn't something that was going to have any standing for us anyway. Not only that, but we didn't get whatever this mitigated, whatever this reacted to, if we justify this reaction, it wasn't strong enough to create a massive break in structure. In fact, the push from here up here took 23 minutes, and the push down from here till we got to the same level took 40 plus minutes. Therefore, the push short was weaker than the push up, right? So not only that, but here, we'll do it like this, 25 minutes. And from that same level to come back to the same price, it took twice as long to go short. So we didn't even get a very aggressive reaction to this higher time frame zone. So there would have been no reason to have looked for an entry here. So now let's show you how we would have found an entry during New York, right? So here we are on the 1 minute time frame. What do we see? We reacted. Here's the news. About an hour or so later, around 6:20 or so, what do we have? We are creating now a very corrective demand structure. So price is a corrective buildup of liquidity, which shows us that we're creating liquidity for shorts. Why are we creating a demand chain that's so corrective with no sweeps. And the reason why is because in this zone, we're going to react to something. All we had to do, though, was because there's not enough liquidity in the actual 4-hour zone, what we really were looking for is just to sweep it. So let's see if I can get rid of the, can't. Let's see if I hide this. I don't know how to do that one. All right, so here we are from this low to this high, to this low, to this high. From this low, did not make a new high, but where did we make the new high? From this push. This was the extreme of this massive leg that was formed on the 1 minute. So this is the low. Remember, in a demand, if we're creating a demand chain, if we're creating a bullish market, we are what? Protecting the lows, targeting the highs. This high was broken by this push. This one therefore should be protected. This leg did not break anything, but this one did. So from this push that this one targeted 2 points of structure here, right? Or this isn't a new part of structure, but this is internal. This one broke these two levels, swept them, created this massive impulse upward that swept the 4-hour time frame, right? This should therefore be protected. In fact, we should come down to get a reaction from here, right? But guess what? We're not done yet. We're still creating, we're still adding to this leg. This high was later broken by what? This high. So from this high to this low, we get a push and a wick that took out that level. So where do we have our change of character? Our change of character is when this demand fails and this high is respected. So at this point, what do we get the change of character? It's signaling that we broke structure. So in this case, instead of making new highs, this was the last high, we now targeted a low. This wasn't just a sweep. This is a shift in market structure. At this point, this is the moment at which we broke the low, and this high was respected. We did not break a new high. We made an equal high, right? And for some people, they might say, well, that's a creation of liquidity. We could continue to go higher. We could look for that. But what do we have? We broke leg 1 with this push down. We broke leg 2 with this push down. And we broke leg 3 and 4 with this push down. Therefore, what could we have looked for? On this first one, we could have gone an aggressive entry and gone short from here. So this is what my first entry would have looked like. And I'm a pretty aggressive trader. The reason why it looks like this is because what? Once again, this is a pretty big zone and we're in a very tight range. So instead of getting a 4 pip stop loss or so, what do? We're going to take the equilibrium. So we're going to get an entry at the 50% of the last push up, the last candle pushing up that created the sweep before the engulfing candle down that broke structure, right? So this is entry 1. Now remember, we're targeting a 4-hour point of interest because this is a 4-hour supply zone that we swept, right? We received a change of character after sweeping that point of structure on the 1 minute time frame. That change of character is indicating that we should go short. We only have a 2 pip stop loss and we're targeting all the way down to the initial low of the leg that created the push up that swept, right? So anyways, entry 1. Now this is where it gets interesting. This leg was one pretty big leg here on the 1 minute that pushed down, that broke 1, 2, 3 points of structure on this corrective buildup, right? So what can we bet? Well, we still have many points of the leg to mitigate, to break. This is very corrective. We need to pass all of these legs and break them, and we're targeting 4-hour zone. So guess what? We could also take another entry at what? Well, look at the last push up that made equal highs before this engulfing candle that pushed down, right? So here's setup 5. Now I'm going to hide setup 4 so that you can just see this move. This is what setup 5 looks like. Well, we get this push up that kept equal highs, respected the high. It was still a little bit lower. This leg pushed down, broke 1, 2 points of structure, and therefore, because we have not mitigated the bottom of this range, we have some sort of doji in here, the bottom of this candle here that pushed up, this wick that came up and then price came down to sweep these levels, we have not yet tapped the bottom of the range. Now, instead of taking the 50% on this level, because we've just mitigated this 50, we might not necessarily need to cover the entire thing. We're going to go with a 25% entry. And that's what this looks like. From this low to this high, 25% entry, a 4.3 pip stop loss. And so this is what two entries that we got. We have entry 1 that is 53R. And we have entry number 2 that's 28R. And remember, what are we targeting? By the way, we'll talk about the break even in a second. But look at how smooth this drop was. What are we targeting? This, look at all these the equal lows here. This is an inducement of liquidity that is going to be swept. But this is the extreme of the leg. From that low, we created this is the origin of the push up that came to mitigate the higher time frame zone right here and later swept it, right? And so when we got an entry here, we're targeting the break of that low. And remember, break evens, right? How do we protect our trades? Well, we protect our trades because when we break the first leg of structure, we go to break even. So for example, here, this low, that would have been our entry 1. When you break this low, we would have gone to break even. So this was the first leg we broke. So this one pushed down, created the first break here. Entry 1, when we broke this level, this would have turned into a break even. So we would have been protected. Now, as you can see from this break even, here, let me clean this up a little bit. Then what happens is our secondary entry, price came up. What happens? It didn't even come close to our break even. Our break even for entry 1 was up here. Therefore, what happens? We're still in trade 1, and trade 2, when do we move it to break even? This is the 1 minute time frame. So after we got triggered, within 1, 2, 3, 4 minutes of being in this trade, we already set entry number 2 to break even. Break even. So now we have 2 trades that are running risk-free within a few minutes. And we have a 53R trade and a 28R trade that are going to be targeting right here. Let's move to the 1 hour. Clean it up a little bit. They're going to be targeting the extreme of this leg that created the push up. Because why? This 4-hour supply zone was responsible for several breaks in structure on that, basically a very powerful continuation of bearish momentum, right? So we traded the reaction after the sweep of the supply zone, and we had two massive trades, right? Sorry, I'm trying to clean up here. There's just so much stuff on this chart here, kind of looking like a mess. All right, so let's take a look at that. Last time, entry 4 and entry 5. So that was the last 2 examples that we had. Let's see, where do we go here? Where did they go? Here we are. So you see how crazy that is? This is a very powerful system. It's hard to believe that something like this is possible, but you can get trades like this every day. And I'm telling you, it's very easy to trade this type of system. So in summary of this is basically a breakdown of the system that I use on a higher time frame to create lower time frame entries. It's a reaction-based system. I look for lower time frame reactions to higher time frame point of interests. I wait for the lower time frame to give me an indication that price is going to shift in momentum. It's going to switch and give a reversal to from bullish to bearish, or from bearish to bullish. I'm looking for change of characters, and I'm looking for flips on the lower time frame. And I'm trading with very small stop losses, getting massive risk to rewards. Now, this was a very simple trade. This was a very simple video showing more than anything about reversal setups. Now, There's going to be more videos that are going to go on continuations. That's a different story. But this is just to show you the power of having a reaction-based entry system. This is how I trade. This is how I'm catching 10 to 20 R per day, per session. It's, your account can very massively start increasing and scaling if you take advantage of trading something like this. More than anything, what you have to have is, have the mindset and the patience to await these type of entries, because you don't want to get trapped in bad trades looking for places where you can enter where there is no setup, right? So remember, we await confirmation for entries and we wait for mitigation of these zones so we can take the confirmation. I hope you enjoyed this video. I hope it wasn't too long for you, but I know that this video is definitely something that was powerful, and this will completely open your eyes, open your mind to a new way of trading. If you haven't already learned something like this, it's going to massively change the way you trade. So I hope you enjoy this. Stay tuned for the next video and let me know if there's something you want me to make a video about. Enjoy.